Hello, everyone. Ian King here with the weekly Winning Investor Daily Update. And today, I want to talk about three crypto platforms that I would avoid. And if you have any of your tokens there, I would recommend you get them off it, put them on Coinbase, put them on Gemini. But I'm going to give you three platforms that I would avoid. One of them has already been in the news. And I'm going to discuss exactly why you should avoid these platforms. But first, if you like the content we have with these videos, please go ahead and give us a like. It helps us get our content out to other viewers in cyberspace. If you haven't subscribed to our updates, please hit the subscribe button. Also hit that little bell button. It'll get you the new video when it comes out every week. And lastly, if you have any comments, we'd love to hear if you're in any of these platforms that I'm going to tell you about today and what your experience has been. Now, the news of the week in crypto is that there is a staking platform. It's basically a crypto lender called Celsius that is blowing up. And the reason why is because what Celsius does is it takes in crypto deposits, it lets you stake them, and gives you a dividend or a return on those assets for staking them. But what they do behind the scenes is a little nefarious. They actually take your crypto assets and then they go through different ways in decentralized finance and lever them up and get a higher yield and then pay you a lower yield on them and then sort of split the difference. And what happened is what everyone is speculating happened is that they weren't very transparent about their losses in Luna UST. And when people started hearing that they lost a significant amount of money in Luna UST, they tried to withdraw their crypto assets. And in the banking world, if there are a large number of people trying to withdraw their assets from a bank at any given time, it causes a run on the bank. And most banks, if every Bank of America depositor tried to withdraw their money all at once, they wouldn't be able to access their cash because of the fractional reserve system. This is an unregulated space. There's going to be much regulation that coming, but let me just talk about Celsius for a minute and show you exactly the platform and the other few platforms that I would also avoid. So this is Celsius. Celsius.network is the website. And right now, you can't join it. And if you're a depositor, you can't get your assets back. But they've got 1.7 million customers. They were advertising, and I think they changed the staking assets there, but they have an earn platform right here, earning up to 8.63%. Okay, so you would stake your crypto assets here, and they would pay you on them. But like I said, behind the scenes, they were leveraging up your assets, earning more returns on them, and then paying you the difference of what they make on your assets. So this space is going to be regulated. The two other platforms that are in the same business are Nexo. So Nexo.io, if you have your tokens there, I would recommend getting them off it. The company says that they have enough liquidity to meet customer demands, but from my experience in the financial markets with what happened with Lehman, you want to put your capital in the safest place, which I would recommend putting it in Coinbase or Gemini. The other one is Blockfi Com. Now, this is another platform that's similar to Celsius and Nexo. They've already been fined by the New Jersey Attorney General, okay? And they let you do the same thing where you can deposit, you can stake, and you get funds back. What these services are doing are just making it easy for individuals to access the DeFi markets. But what I believe is that you should have your own decentralized wallet, like a MetaMask wallet or a Phantom wallet, and then go stake your tokens on your own, whether it be in the Aave protocol. You can stake on Radium. You can join liquidity pools on Uniswap. There are lots of ways for you to earn more interest on your crypto assets. And I wouldn't recommend going through these middlemen because, in the long scheme of things, we want this entire sector to be decentralized. So just want to give you a quick look on Ethereum because this is basically what's happening. We had a breakdown in the last week because of Celsius liquidations. And we're starting to see some more collateral damage. I'm hearing that another large hedge fund has to also liquidate as well after what's happening with Celsius. And at some point, these liquidations will end and buyers will step in and another rally will emerge. This is just part of the evolutionary process of cryptocurrency and of this new financial system that has been growing for the last 12 years now since the invention of Bitcoin. Remember, decentralized finance is like an infant. It's 2 years old. Decentralized finance only really started about 2 years ago. So, these platforms really didn't take off until the last year. And as you can see, this space is just begging for more regulation, which I think in the long run is going to be a good thing. So that is it. I just wanted to give you a heads up of what's happening in Celsius and why you should get your tokens out of there. I would love to hear from you in the comments if you have anything staked in Celsius, Nexo, or Blockfi. How's your experience? Do you have any tokens that are stuck there? Please hit us below in the comments. Thanks for tuning in this week, and I'll talk to you next week. Take care.